Hello everyone, welcome to the double shot. It is the 10th of April. I'm going to walk you through daily drip today. We just had the CPI this morning. It came a touch hotter than what the market was expecting, and with the markets being kind of where they are in that type of consolidation pattern without really trending too much, for the past couple of weeks here. There was, I think, enough of a reason to start pulling back a little bit more. There was a jump in yields, there was a jump in the dollar. I don't really think there's anything really significant developing in here, but we're watching carefully, for further signs of distribution deterioration, break of trend lines, key moving averages, and you can't really argue with the market. It needs to show you signs of recovery and buying before we can start gaining more confidence that the move to the upside will resume. For right now, we seem to be in this at least shorter term distribution phase in the markets. But again, nothing too significant. Tomorrow, could end up being a buy day, and they could reverse everything and continue to move to the upside. I still think, and we'll talk about it shortly, there's still probably a bit more upside in the yields in the dollar that could dampen the market. So we'll play it one day at a time here with the regaining of key levels. The chart of the day is CCJ. This is uranium stock, I think, and it had a pretty good run here, 2022, especially 2023. Hit a top just early January, February 2024 this year, and then it sold off a little bit here into 39. And you can see how it had a pretty decent sell-off. You could look at this as a small WXY or an ABC here, but now you have a little bit of a push to the upside. So you have a neckline here near 50 to 51. This market goes back, tests those levels. This is the third time it does it. This looks like a corrective move. I think it's going to probably spend a couple of more days consolidating here probably, but I would watch definitely for another move higher, because this seems like it's a 1 2 1 2 3 4 5 4 5. So at least $3, $4, $5 to the upside, I would not be surprised to see. And then using this as a defense, one could raise the stops and continue to, because this is a continuation pattern, it could be very bullish moving forward as well. So that's why I put it up. I think that's an interesting setup up there. Now looking at these three markets, you can see clearly how we're breaking below RSP, below the trend line, to the equal weight. A little bit, it's a darker candle than what we're seeing in the SPY, because even though we gapped lower, right, we ended up buying towards the end of the day, and the close here was positive, but the market had a negative day due to the gap because of the CPI, right? So it wasn't necessarily huge amounts of selling in here. The market basically just kind of gapped down. So then you have XVG in here that also kind of cracked this uptrend in here. This looks more like an IWM. So we don't want to disrespect these breaks in here in any way, right? I think they're have their purpose, and they're probably triggering a little bit of an alarm and saying, hey, what are you going to do with the information that's provided to you? And sorry about that. What are you going to do with the information that's provided to you, and how you're going to act in here? So my suggestion in here, at least kind of that's how I see in here, it's a reduction of long positions and a little bit of a raising of a cash is not a bad idea until some of these kind of red levels get taken back to the upside. If they do, if not, further reductions are probably necessary. So here is kind of what happened to the S&P 500. It remains it clearly broke this uptrend. It was a beautiful move. I had the line up at the top. It kind of broke lower, and now with a series of lower lows and lower highs, and until these 5200, 5250 gets taken out, there's not much to do but observe and reduce. So we'll watch for signs of that. You can see here in the wave count, I placed a wave 4 now, that I think it starts to look like we're getting a decent type of correction in here, and it should be followed by another move towards 44, 54, 5500 by the time that kind of finishes off. So that's how I'm seeing it, at least for now. We'll see. I mean, there's plenty of support here between 5100 and 5050 on this proposed wave 4. Nasdaq 100 hasn't done much. I mean, if anything, it's been pretty strong, I would say, right? You don't have you have a sideways consolidation. You don't have that angle pullback that the S&P has and the Dow Jones, right? It's keeping its strength. You could see that below into the OEF or the top 100 stocks. In the S&P, and that looks pretty decent as well. So a break of 18 to 50 in here, I think it's kind of what would start to trigger a bit more buying into the Nasdaq. And here is kind of how it looks on the hourly. Just a nice channel, again, looking for the break of those levels to start to think again bullish. Until then, you're sitting on an awesome support here, 17,800, and we'll see what happens if that gives way. But if it does, and you're getting a couple of, at least a day or two closes in here below that, right, then we got to lighten up even more on long exposure. Fidelity Blue Chip Growth, it's something that I've been watching, and that is a lot of these kind of high growth companies. We all know them by name by now, and it has a pretty nice, I would say, still a bullish channel, probably some kind of a fourth wave into the 50-day moving average at the 50 RSI, with a decent close in here today. So it's, it looks pretty good if we're breaking 38.5 up there. Then you look at Russell, which lost on the 1 hour charts here. You can see even better that series of higher highs, higher lows that we were talking. It lost this support. It came back to the previous swing low. It stopped right there. My attempt of labeling that as an ABC did not necessarily fail, except that it wasn't taken by we were supposed to break back above 208, right, to reinitiate something to the long side. It never did, and it came lower. So it could be an ABC, a little bit of an X and another ABC, or a 1 2 1 2 3 4 5. So we could go lower. So not much to do, but wait for prior swing levels to get taken out. Until then, it's a clear break of this trend. It's a clear break of this as well, but it is coming just at a 50-day moving average with an RSI that drops into 40. A little bit of a panic with the high volume. So if you see a white day tomorrow, at least two of them back above the trend line, back above the 20-day, I think that would be a bullish signal, and we could jump back into the upside. Here is that kind of wave 2 idea that I talked about, that it's still possible that this could be a B wave, either this whole thing or just at a smaller degree with an ABC, and then we can reverse higher. So these are very interesting setups, right? The market still has false starts, wants to shake people out before we could begin a strong trend upwards. So we'll see. Dow 30 in here, right, is just at 38,460, sitting right at the trend line, closing just at the support lines, closing right above it, but below the key moving averages, with RSI revisiting 40. So this is the weakest of them all, but it is holding here. I think what you could expect, if this is some kind of a double top that we talked about, that's a left shoulder. I mean, there's a possibility that this could make a right shoulder right there and then really break. So that's kind of what I'm going to be watching from the current levels. Not much to do until you're starting again to reaccelerate to the upside, break some of these key zones, 39,000, 39 to 50. Give it a couple of days to see if we can recover, if there's buyers showing up, right? Otherwise, longs could be initiated on a very, very tight stop. Like just below, I don't even say like 38 to 50 or something like that. I would not even dare to, let it go more than that. But, first, if you can see buying first, I think that's probably better. OEX, here's the top 100 stocks. The ETF that follows, I think it's OEF. But again, just like you saw in the blue chip growth, just a nice little flag in here above the 50-day moving average shows you that these large stocks are holding pretty well, and they might hold pretty well during market corrections because they're great stocks. 10-year yields and DXY, here is breaking 40. I think we went as high as 4.6. No, we didn't reach 4.6, but maybe 455 or something like that. Anyway, a pretty big candle. This resistance did not respond, right? We didn't get a break back to the downside. Now we're above all the key moving averages. We're trending up again on the PPO, and if this continues, guys, that's a danger for the market. So very, very important what happens here. This looks like a corrective move against this downtrend, but the higher you go above 4.7, the more dangerous it becomes. So that's the level I'm going to be watching, along with the dollar here into 105, 105.50, and it's still got plenty of supply up into 106. So this could be just a simple three-wave move. Or if one wants to really be bullish dollar, you can count it as a 1-2, 1-2, and then, here you go. You would have to kind of pick, maybe the euro or the Aussie dollar or some other things to kind of trade the dollar on that. There are ETFs that like UUP and I think there's an inverse one as well. But anyway, let me know if you need more information on that. And here is the weekly close on the DXY that I think will be very important, because you're getting above this major trend line and it starts to look like a bullish development. So what if the dollar is sounding some kind of an alarm here? We'll see. Bitcoin, acts as expected, remains into this kind of very tight consolidation, probably a triangle or a series of ones and twos. My hunch here is that we're probably going to break 72.5. I put that in the note. I think I said 71.5, which is kind of where all of that is, even higher, give or take. But it's back at 71. We're looking for a break of those levels, and on the hourly charts, you got this nice correction here as a swing. You came back into the 61.8 of this move. You tried to break higher, failed, came back, and now we're pushing back to the upside. So 71.5 to 72, a break of that level should trigger further buying and moves to the upside. If we're failing again and we're losing this low, I think things could start to look problematic for Bitcoin, but then you're coming back into that kind of 65,000 range. So I don't think it's time just yet to press. I would definitely wait to see, if you're getting a break above that 71.5, 72.5 level, and if that happens, we could continue to push towards 90,000, and it's possible that the markets, are done correcting or in the final stages, and they could swing back up higher as well. Again, the caveat here is the dollar and the yields that are pushing. So we're getting, a bit of mixed information there, but that's why we're watching this from a intermarket perspective analysis type of thing. So thanks for watching, guys. I'll see you tomorrow. Bye-bye.